Moody's Analytics chief economist Mark Zandi joins us now. I mean, you just heard Steve. We saw what happened with jobs. Why do you think they should be in cutting mode already?
Well, I think they've hit their objectives, Sarah. I think we're at full employment. The unemployment rate is notched higher here over the past year. We're at 4%. That's consistent with a full employment economy. And I think inflation properly measured is at target. At the harmonized inflation measure, excluding owner's equivalent rent, we can talk about that if you'd like, has been at 2% now for 12 months. So it feels like to me they've achieved their objectives. And if you've done that, then you have to ask yourself the question, well, why do we need such a high rate, 5.5% rate? And, I agree with the folks that say that the kind of the equilibrium rate, that rate, which is consistent with policy neither supporting or restraining growth, is higher than it has been historically for a bunch of reasons. But it's not 5.5%. And as long as the Fed keeps its foot on the neck of the economy, it runs the risk of breaking something. And again, why? You've hit your objectives.
Except they don't target the harmonized, what did you say, read X owner's equivalent rent. They target the PCE, and it's not there yet.
It's not, but it's all the trend line suggests that it's headed in that direction. And the only difference between where they are now on the PCE and where they want to be is OER, and that's the implicit cost of home ownership, which is difficult to measure in typical times. It's impossible to measure in a housing market that's as topsy-turvy as it is today. And in fact, in the rest of the world, they don't even attempt to go down that path. So, if you're looking for underlying inflation, we're there.
It's fair, and PCE is 2.7, so it's not that far off. But I guess the concern would be, if we keep getting these strong jobs numbers with strong wage numbers, which was also a surprise on Friday, and potential acceleration here in consumer spending, that they could risk another flare-up of inflation, and it would be worse to have been cutting when that happens than to wait.
Sure, but I don't think that's happening. I mean, the strong job numbers go to the strong immigration. I mean, you can see that in the household survey. Unemployment is a 0.5 point higher than it was this time last year. Hiring rates are down, quits are down, unfilled positions are down, temp jobs are down, hours worked are down. Look under the hood of the labor market. It's softish. It's hanging in there. It's creating a lot of jobs, but it's not suggesting that things are going to rev up here. And then just note, I don't look at the data that Steve was just showing very closely, but I did notice. Did you notice through year over year is 3%, right? 3% inflation on the CPI is 3%. So that means real growth over the past year is 0. Now, I know if you look at the entire consumer pie, but if you're looking at this piece of the pie, it doesn't suggest things are revving up to me.
So you think it's misguided, the policy now, that they're not cutting and they're going to wait till September? Do you then expect a harder landing? Do you expect because of that time that they're not cutting from these restrictive levels, we're going to see a bigger impact on the economy?
Well, no. I mean, the most likely scenario, the baseline, kind of in the middle of the distribution of possible outcomes, is still that they kind of pull this off the economy soft lands. I do think the economy is resilient. But, the risks are rising that they make a mistake here. They're not inconsequential, and they're moving higher. I mean, we mentioned the job market, but the other thing to worry about is what's going on in the financial system. And the yield curve, the difference between short and long rates is still inverted. Short rates are above long rates, and that's a very uncomfortable place for bank and other financial institutions to be in. And so something could break. So, no, I think the most likely scenario is they pull this thing off, but they're taking a chance, and the risks are rising that they don't. And the question is, why? Why exactly do that?